Okay. So when you look at these charts, these price charts, they're fucked up. They're not. These price charts are trading this dollar amount. So when you're actually trading options, you're paying $16 for this.
Mm.
You got to times it by, well, they're 1-to-1. So this is $16. That's how much the trade is going to be worth for you if you're on the short side. So you're actually paying this amount or selling it for that amount. They start to get cheaper. So if you look at the 77.50, we're trading $18, right? We'll go one day out. The 77.50 one day out is $30. Then we'll go to 5 days out. 77.50 is $44. So you can see it's more expensive. Those numbers go down, and these numbers, these price charts don't look anything like ES. They can at times. Here's ES on the left. They can at times look like it.
Mm-hmm.
But for the most part, they don't. So options don't, they're all directional. Doesn't matter what you're doing. Because a long call is a long, a short call is a short, a long put is a short, and a short put is a long. They're all directional. No matter where you're buying on this chain, it's a directional bet. And the moment ES moves, you're either winning or losing. Obviously, the thing is time can make your position lose as well or win because these start to go down over time. So you notice these bid offers are all changing. Why? Because ES is going up and down a tick, right?
Mm.
So why 0 days? Because you have more bid offer movement coming through. And there could be guys that are on positions from a month ago who are trying to close their positions.
Yeah, that makes sense.
So if we go further out where we're not trading as much, like let's go way out, like 72.50s. I mean, the bid offers are changing in this area. But near the center where the at the money is, the spreads widen and they change more rapidly.
Yeah.
You've probably heard of gamma risk.
Mm.
The spreads go from like 5-cent increment to 10-cent increment minimums.
Yeah.
And you got to, so you have all these order books, right? Here's the at the money line where we're trading on ES. You need to think of it like throwing a stone into the water and it ripples out. You know how you can see each of the ripples going out when you throw a stone in the water?
Yeah.
Right? And the ripples near the center are more violent and the ones outside are like less violent. So wherever ES is trading, the in the money or at the money order books are experiencing that violence. And then you can look at it like the water is rippling up and down, and it's like lesser and lesser volume as it goes out.
Yeah.
But you're getting more violent spread activity. However, if you're trading at the money on options, you stand to make more money because as you go further out, the spreads, the way the bid offer moves, they don't move one for one with ES tick movements. They're more violent at the money, where they're more sensitive to ES tick movements.
Mm-hmm.
Where the further you go out, ES tick movements aren't going to cause as violent of a bid offer movement. Like right down here, there is no bid offer movement going on. It's 5 cents by 10 cents, 5 cents by 10 cents, 5 cents by 10 cents, 5 by 15. And ES is moving, but these bid offers are not moving all the way at 74.70s. But if ES starts to get here, you'll start to see these bid offers down here on the right will start to look like this. So we can see as we go further out, down here, the bid offer spreads are not as violent to the point where they're not even going to move at all.
Yeah.
But you're going to get that violent movement near at the money, especially on a 0 day, because this dollar amount you're seeing, $17 and $18, that monetary value is going to start going down very fast.
Yeah.
Because they're racing to 0. That's why they're worth $19 right here. We go out the next day, they're worth $30 on Friday. 8 days from now, they're worth $60. A month, $140. Same strikes, different order books. So all it is bid offer, and where's ES? That's it.
Yeah.
Because I used to put spreads on 100 points away, where I try to collect premium, like that expiration. But if the market started dumping towards me immediately or whatever, I'd be losing.
Yeah.
And if it kept coming to me, I'd still be underwater. And the problem is the passage of time.
Yeah.
The price movement coming towards me was outpacing the passage of time. And if there's a volatility event, news or war or something, those bid offer spreads will pump and get more expensive. So sometimes people before earnings will take advantage of those big pumps on the bid offer, and then after earnings, they'll just like drop. But it's in the end, it's the assets price movement that is rippling through the order books like water.
Yeah.
So your 0 days have a fuckload of volume, then the next day has about 20%, but I don't know what the quarterlies and the end of months look like, because if I can figure that out, that's where the institutional flow should be. So maybe my theory is wrong. People aren't working anywhere. There are specific areas they're going to work. Because when I ran my test, if you're 25 strikes above and below at the money, 0 contracts were coming through.
Yeah.
And I think that's because the bid offer spread is so bad, it doesn't move. It's not even worth trading that. Because if you can trade near at the money or out of the money, near that where ES is, the bid offers will pump. And if it moves in your favor, then you capture the most reward in an option contract.
Yeah.
Than if you're trading really far away from it.
That's
So
interesting shit, man.
But everybody makes it overly complex. You got to look at your Venas and shit. And it's like, no.
No, how about no?
Like all that shit is the this is the Black-Scholes model. It's just a mathematical formula. But in my opinion, it's just fucking indicators, and options will not do shit without the actual price of something. It is literally it's like the little fish that attaches itself to a shark. It's nothing. It's this weird auxiliary product on top of whatever. But these future options, they're over 1 million a day. Yes is about 1 million a day. It's shy maybe 300,000 contracts to ES. You're talking nearly half the volume. Almost half of the volume is going through this. So when we were doing all that notional shit with MES, SPY, those were worth such little compared to ES that it barely changed the delta. With this, it'll change it more drastically. And this is my proof of concept before piping in SPX, which Taco is figuring out how to tap into it already.
Nice.
I'll be right back.
Oh, they want this down move. They're stacking the offers on it.
I'll say this though before I start analyzing trading. So if we look at the ABV diff and it's just been going down and down, or if you look at NVIDIA, like right here,
Yeah.
I have one. Why has this delta been going down for days and days and days, but the price is going up? Shouldn't happen. This is telling me the product is being flooded with supply. It's called supply and demand. You don't have rising prices on flooded supply. Well, if you look at the volume in the options contracts for NVIDIA and you do the notional math, because one option contract is 100 shares, the options for NVIDIA are 2 times larger volume than the actual shares. So in 2023 or 22 or after COVID, I'm like, where did all the fucking liquidity go from ES's DOM?
Yeah.
Because it used to be 400, whatever. Well, they started adding more of these 0 days. There is more volume going through the option contracts than there are available float for shares. Because there can only be so many shares in circulation. Option contracts and future contracts are unlimited. Unlimited of those can be open. But there can only be so many shares for a company, right? Well, they keep adding these 0 day products. They added more of them at the beginning of the year for the blue chip stocks. There is now more volume flowing than there is shares available. Equity options can be exercised for shares. And I tell these guys this, it's like bank runs. If everybody goes to the bank at the same time to pull out their money, they can't pay everybody.
Yeah.
I think this is why, because in 2019 we went up to 3,000 for the first time. Now we're trading in the 7,000s. How did the price go up so fucking high so fast? They're adding more products and there's simply not enough asset.
Yeah.
It's fucking ridiculous, dude. The market is being driven up on bullshit.
Yeah.
I don't know what's to happen, but yeah. That's
No, it makes sense, dude. And I agree. And I think a lot of my new market outlook is leaning into that. You know, like it is bullshit. And instead of being a little bitch and whining about it, you know, like coming home at the end of the day and you're just like, oh, the market's fucking rigged, you know, the fucking market makers are pulling orders and being a bitch about it. It's like, all right, so how do I, if you can't beat them, join them, you know? Like, how do I join those guys that are fucking pulling the offers and pulling the bids and boosting the market up on bullshit? How do I read that? How do I get a read on what's going on there? You know? And it's been working, you know. Granted, the last week isn't a huge sample size, but I feel that clarity. Clarity is a feeling. Clarity is a feeling you have in your stomach. And I feel that I have more clarity now than I did prior.
Yeah, I was
Thanks
just
to this
hoping the
tooling.
stock. I was hoping the stocks would be it, but
Mhm.
I guess I'm gonna have to go back down this fucking rabbit hole. But it had always been sort of gnawing at me. There was something going on, and everybody's like, "Oh, they fucking hedge." Well, that photo I showed you proves that they do hedge.
Yeah.
But also the theory of I think they're hiding in a complex order book is true.
Yeah.
They are. Um, and I was telling these guys on the close, I'm like, dude, there's a lot of trapped inventory underneath this range that was going on for hours. Trump was speaking right on the close, and sure as a fuck shit, it blew out.
Yeah.
But I'm like, but I was baffled. I'm like, why is it all day there's more option buying? That means they're betting the market's going to go up. I'm like, why are the options just going up
Mm.
on a 0 day? It the options just fucking clapped out a fuckload of trapped inventory. So it's to be looked at the same.
I got some good pulse checks while you were talking. And then I've also got some good trades. I've got 3 winning trades. I'm up $100. Just utilizing that spoofing read. Because right now they are spoofing the market up.
Yes, options have gone up 120% in 4 years. I'm just reading this research. Yes, options run 1.14 million a day. Spread strategies is 44%. I don't give a fuck. There's a more complex book where you can see people creating spreads where they're buying more than. It doesn't matter because one side's always winning and losing. So the nearest 5 days are 2/3 of everything. SIBO, OCC, all US listed options Within 1 day to expiry is 32% of volume. Within 5 days is 49% of the volume. Within 30 days is 75% of the volume. It looks like so the big open interest lives at quarterlies and end of month. Institutions park positions there. Their day-to-day volume is thin. Quarterly expiration weeks triple witching, especially the fixed costs almost nothing. So the thing I'm building for the options is gonna, because the problem is it currently sets the current strike. It'll automatically be adjusting out the ticker symbols 25 strikes on wherever we're currently trading, leaving the delta history. Because if the market trends, you have to constantly adjust your strikes. Fridays hold essentially all the parked positions. Everything beyond the current week. Fridays, end of month, quarterlies carry roughly 80 to 90%. It's not in a published report. I actually want to get this put together.
Grabbed a short at 63.75, out at 61.75. I took a small loss on the way up there. So I netted probably $30 from that trade total. They're trying to spoof the market lower right now, but there's just a support resistance down here that they can't get through. There it goes. You got the unwind on it.
It's interesting because these 0 days are all fucking going up. ZS price is slamming.
Just trying to spoof up now. It's pretty thin up here in this area.
The stocks had a fuckload of buying on the open, actually. There's so much trap flow above us. Or below us, I should say.
There's the lift. I had a 58.75 long out at 61s. I was in it longer than I would have liked to be, though. That was a good exit. That was a Goldilocks exit.
So say that again.
Long 58.75 out at 61s. There's 10 o'clock news. You're doing a pretty good job of spoofing the market back up. Got a long 57.75 out at 59.50.
Yes, this delta's dumping, and then you just options are ripping up. And then stocks also had a fuckload of buying on the open. And when that happened yesterday, we did experience some down movage. Because the stocks have not been seeing any buying for weeks until yesterday and today.
Long 57.75 out at 60.75, but I took a loss on the way down. But I still netted 3 ticks from it overall.
Yes, has a shitload of trap flow on both sides, really. Something about these 60-ish areas, very loose. It is almost like these fucking psych prices do like the trade where they just swing violently. And this slip range is almost like auction market theory around the 60 strike.
Big spoof low. It could be setting up for range expansion.
I really feel it's going to blow low.
Yeah, if they top ticked the top of the range, spoofed it all the way down through the range, they're probably going to come out through the bottom.
Oh, huge puke on options right there. They're recouping that. Like somebody sold a fuckload. Because like the ES's delta's matching the price action, and it's these fucking option contracts diverge hard, which I think is where the real trapping of inventory comes in.
Mhm.
I mean, this fucker's so loose though. We've actually been in a range in this overnight. If you really look at a higher time frame, when we're 17 lots deep, we've been in a pretty big range here. Yeah, I feel the same way, Brian. So look, your options are continuing to go up, where your ES is going down, and we're in this range.
Mhm.
That's your hedging activity. Theoretically, I would want to combine the two deltas so that way we can see like where's more of the flow getting trapped. Cool liquidity up there.
Had a 63.50 short out at 62.25. I would have liked 61s, but I don't like that they're keeping it up here, especially on
Yeah.
scraping.
Seems to be like eerily quiet now.
So I'm glad that since first started using this strategy, this is the first range day we've had, and I was afraid for that. I was afraid that this was just a trend following strategy, but today's actually my biggest day,
Good.
so it looks like it is really
Yeah, I
giving me
think this is your
signals.
regime too, because I just have been struggling severely for days and days.
Yeah, it's
I
giving me
just
good
been
signals at the bottoms and the tops of the ranges, which is good because I do sometimes struggle with that too. You know. Why did my OBS disconnect? That's frustrating. Tried to grab that 65 long, but I missed it.
Just resting liquidity in the 68s. They just kind of sniffed it and didn't even want it.
Nice lift up there. Long 62.50 out at 65.75. But I took a loss on the way down, so netted probably a point off that. Nice lift out. Got a long 66 out at 67.25. And I think that's my last trade for the day. I'm up 444 before commissions.
I don't know what the fuck you're doing. Like, I have no idea what you're doing.
No, that's fair, dude. I'm leaning so heavily on the spoof indicator.
Like, I don't get it. You just trade into the clusters of hard numbers, because when I do that, it doesn't work.
Yes, but only if I have a trend of spoofing. Like, look at the spoofing profile right now, or the spoofing column. Like, we're almost pure spoofing to the upside. So what I wait for is I wait. I would not long this pullback because it's spoofing down. I don't like it when it spoofs down. If it pulls back on hardcore selling, I think that those sellers are going to get trapped and it's going to spoof up because it has been. It has been spoofing up. You know,
So you're waiting for red numbers that are not light pink, and then you go against them.
yes, but it helps if they're at the bottom of a range. Like right now, it kind of looks good because there's a lot of dark red coming in at the bottom of a range. However, they've been testing the bottom of this range so many times. I kind of want to see if they're going to blow it out like they are right now. And then I'll sit around and I'll wait for right side of the V. So maybe now, pulse check 64.50 long. They haven't been working instantly today, though. And my hold time today has been like upwards of a minute, which is pretty unusual. And then I'll usually just target like the nearest cluster of dark selling. So I'd probably target like 65.50. But it might not work. Like it hasn't been 100% win rate today. I might flat key it if it breaks 63. Yeah, I'd probably flat key it there for a small loss. Now it could be pulling back to the bottom of the wider range here, which we do have dark red selling above us. But I always want to be on right side of the V first.
What did you say?
I want to be on right side of the V. Because if I don't wait for right side of the V, sometimes they spoof it low, like they just did.
Dude, it's not good, but I'm like horribly short biased. And I have been.
Yeah, now that they just spoofed it low like that, I agree with you. I do think now shorts are.
It's because there's so many fucking trapped options, which I deleted all that because I'm trying to put the new version on.
We've got right side of the V here. I might pulse check long 60 even. And just see if they lift the offers and get a quick lift up. Problem is though, if I'm long and I see a bunch of dark greens start to get trapped, that's not good for my trade, you know? So they're going to continue to spoof it low. I think we're in a downtrend now. I would now be looking for short opportunities. Good read, man.
Timing is another problem in itself.
Yeah. Could have potentially been a short there at 56. Pulse check short 55.50. I'd probably take it at 54.50 for the point, just because I don't like that reclaim on my backside. But it did work. All those buyers that came in around 55, 56, they got trapped and it spoofed low.
All the stock deltas coming out. If you look at this screen right here, there's a huge cluster of buying, and it's all coming out. We have not seen it do this except for yesterday and now today. The inventory's just been shitting itself. So if we're experiencing massive clusters of stock buying, that is a huge change in character, because for weeks they're not doing that. I gotta piss real quick.
It's lifting again on early buyers. Slip range favors, pulse check short 55. There was small news that just hit though, so that could influence it. Yeah, I'd probably flat key it here at 57. So probably not a good idea to fade news like that. Especially with that big reclaim on my backside.
No wonder the study is not working. It's giving me 2009 for the dates.
Now it's shoving low. Probably pulse check long 54. I would have been pretty comfortable holding through that, I think, but on this retest down, I don't think I'd be holding it anymore. I also didn't have great range advantage on that.
There it is. So this option delta is only showing the 0 days. This is going to have several days in it. It's going to be 5 days, and then every Friday of the month, and my end of month as well. Contract.